Direto, Felipe, com...
O Jerome Powell acabou de chegar, vamos com imagens ao... De agora, vamos lá, Carlos. Boa tarde.
My colleagues and I remain squarely focused on our dual mandate to promote maximum employment and stable prices.
Eu e meus colegas ficamos focados no... Eu preciso mais um pouco de áudio alto porque não estou conseguindo ouvir o Powell. Vamos ver se a gente consegue ouvir o Powell agora.
Price stability is the responsibility of the Federal Reserve.
A estabilidade dos preços é uma responsabilidade do Federal Reserve.
In particular, without price stability, we will not achieve a sustained period of strong labor market conditions that benefit all.
E sem uma estabilidade dos preços, não vamos conseguir ter uma situação no mercado de trabalho que ajude todos.
Today, we took another step by raising our policy interest rate a quarter percentage point.
Hoje fomos um passo adiante na nossa política de aumentar a taxa de juros em 0,25%.
And the full effects of our tightening have yet to be felt. Looking ahead, we will continue determining the extent of additional policy firming that may be appropriate. I'll have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that economic activity has been expanding at a moderate pace. Growth in consumer spending appears to have slowed from earlier in the year. Although activity in the housing sector has picked up somewhat, it remains well below levels of a year ago, largely reflecting higher mortgage rates. And higher interest rates and slower output growth also appear to be weighing on business fixed investment. The labor market remains very tight. Over the past 3 months, job gains averaged 244,000 jobs per month, a pace below that seen earlier in the year, but still a strong pace. The unemployment rate remains low at 3.6%. There are some continuing signs that supply and demand the labor force participation rate has moved up since last year, particularly for individuals aged 25 to 54 years. Nominal wage growth has shown some signs of easing, and job vacancies have declined so far this year. While the jobs to workers gap has narrowed, labor demand still substantially exceeds the supply of available workers. Inflation remains well above our longer run goal of 2%. Over the 12 months ending in May, total PCE prices rose 3.8%. Excluding the volatile food and energy categories, core PCE prices rose 4.6%. In June, the 12-month change in the Consumer Price Index, or CPI, came in at 3.0%, and the change in the core CPI was 4.8%. Inflation has moderated somewhat since the middle of last year. Nonetheless, the process of getting inflation back down to 2% has a long way to go. Despite elevated inflation, longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher cost of essentials like food, housing, and transportation. We're highly attentive to the risks that high inflation poses to both sides of our mandate, and we are strongly committed to returning to inflation to our 2% objective. At today's meeting, the committee raised the target range for the federal funds rate by a quarter percentage point, bringing the target range to 5.25% to 5.5%. We are also continuing the process of significantly reducing our securities holdings. With today's action, we've raised our policy rate by 5.25 percentage points since early last year. We have been seeing the effects of our policy tightening on demand in the most interest rate sensitive sectors of the economy, particularly housing and investment. It will take time, however, for the full effects of our ongoing monetary restraint to be realized, especially on inflation. In addition, the economy is facing headwinds from tighter credit conditions for households and businesses, which are likely to weigh on economic activity, hiring, and inflation. In determining the extent of additional policy firming that may be appropriate to return inflation to 2% over time, the committee will take into account the cumulative tightening of monetary policy, the lags with which monetary policy affects economic activity and inflation, and economic and financial developments. We will continue to make our decisions meeting by meeting based on the totality of the incoming data and their implications for the outlook for economic activity and inflation, as well as the balance of risks. We remain committed to bringing inflation back to our 2% goal and to keeping longer-term inflation expectations well anchored. Reducing inflation is likely to require a period of below-trend growth and some softening of labor market conditions. Restoring price stability is essential to set the stage for achieving maximum employment and stable prices over the longer run. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you, and I look forward to your questions.
Steve.
Mr. Chairman, thank you. You have, I think, a couple times in your opening remarks talked about this language in determining the extent of additional policy firming that may be appropriate. Should we take that to mean that additional hikes are likely on the way? And should we also believe that all future meetings, say September and November, are live, or are you in a every other meeting mode? Thank you.
So we haven't made a decision to go to every other meeting. It's not something we've looked at. We're going to be going meeting by meeting, and as we go into each meeting, we're going to be asking ourselves the same question. So we haven't made any decisions about any future meetings, including the pace at which we'd consider hiking. But we're going to be assessing the need for further tightening that may be appropriate. You read the language, to return inflation to 2% over time. I would say that the intermeeting data came in broadly in line with expectations. Economic activity remained resilient. Job creation remained strong while cooling a bit. And the June CPI report actually came in a bit better than expectations for a change. And the June CPI report, of course, was welcome, but it's only one report, 1 month's data. We hope that inflation will follow a lower path it will be consistent with the CPI reading, but we don't know that, and we're just going to need to see more data. So what are we going to be looking at? Really, it will be the whole broader picture, and starting with we're looking for moderate growth, right? We're looking for supply and demand through the economy coming into better balance, including in particular in the labor market. We'll be looking at inflation, and we'll be asking ourselves, does this whole collection of data, do we assess it as suggesting that we need to raise rates further? And if we make that conclusion, then we will go ahead and raise rates. So that's how we're thinking about the next meeting, and how we're thinking about meetings going forward potentially. But we're now mainly thinking about the next meeting. I will also say, since we're talking about it, between now and the September meeting, we get 2 more job reports, 2 more CPI reports. I think we have an ECI report
Pergunta do jornalista que está sendo feita agora sobre os futuros encontros, futuras reuniões do Comitê de Política Monetária dos Estados Unidos sobre eventuais novas altas taxas de juros e o que esperar das próximas reuniões. E o presidente da Federal Reserve, Jerome Powell, está respondendo para o jornalista dizendo que serão tomadas decisões reunião após reunião na base dos dados. Eles estão aguardando, estão olhando para crescimento, uma expansão moderada, estão vendo os dados de inflação, CPI americano também, os dados sobre a expansão econômica e sobre o desemprego. Diz que a expansão econômica, a economia está resiliente e que serão tomadas decisões dependendo dos dados que chegarão reunião após reunião.
Does that mean there's unlikely to have been a change in the overwhelming outlook of the committee that 2 more hikes are necessary?
I'm just going to go back to what I said. That's the question. We have 8 weeks now until the September meeting, and all that data that I recited, we're going to be looking at all of that and making that assessment then. And it really, we did have the one good reading, and of course we welcome that, but it's just one reading, as everybody knows. And we've seen this before in the data. Many forecasts call for rates for inflation to remain low, but we just don't know that until we see the data. So we'll be focusing on that.
Gina.
Thank you. Thanks for taking our questions, Chair Powell. Obviously, you upgraded the language around growth in the statement today. We've seen the Barbie movie numbers. We've seen everyone going to Taylor Swift concerts this summer. It seems like the American consumer is in pretty good shape. And it does seem like growth is sort of picking back up a little bit, or at least doing well. And I wonder, from your perspective, if that continues, if we see growth not just stabilizing, but doing performing well this summer. Is that a problem because it's inflationary, or is it good news because it suggests that a soft landing is more likely? Just how are you thinking about that sort of trajectory?
Yeah, so
Pergunta da jornalista sobre a trajetória do crescimento econômico, do fato que a economia americana está respondendo muito bem, demanda, especialmente dos serviços, citou até o filme da Barbie, a forte afluência nos cinemas, e como o Banco Central Americano está guardando essa trajetória.
That's a good thing. It's good to see that, of course. It's also, you see consumer confidence coming up and things like that. That will support activity going forward. But you're right, though. At the margin, stronger growth could lead over time to higher inflation, and that would require an appropriate response from monetary policy. So we'll be watching that carefully and seeing how it evolves over time.
E a resposta do presidente do FED é sobre o fato que, de fato, a economia americana está indo muito bem, estão de olho no que vai acontecer, a demanda é muito forte e eles vão analisar os dados que virão.
Still strong, but moderating. JOLTS look good. So if you're data dependent, why not pause again? Why not stay on hold? Why not take another meeting off when the data was at least cutting in the direction you want to see?
Pergunta ao jornalista sobre por que não cortar juros, para parar de cortar juros, se os dados são aqueles que o Banco Central Americano esperava.
At the last meeting, we wrote down our individual estimates of what that would take, and the median of that was an additional 2 rate hikes. So I would say we looked at the intermeeting data, and as I mentioned, broadly consistent, not perfectly consistent, but broadly consistent with expectations, and as a result, we went ahead and took another step. And that's, a labor market that continues to be strong, but gradually slowing. I mentioned that the inflation report was actually a little better than expected, but, we're going to be careful about taking too much signal from a single reading. And, growth came in stronger than expected. So that's how we look at it, and so we did take that step today.
O fato que o crescimento veio maior do que esperado, o número de empregos também veio maior do que esperado, em linha, aliás, com o esperado, e por isso que eles tomaram essa decisão de aumentar os juros em 0,25% nesta quarta-feira.
From June for the fourth quarter of this year will be too high, given autos and shelter. And that by September, that may warrant a downward revision in the inflation forecast of 20 to 30 basis points. Would that type of inflation progress be enough to hold rates steady from here, or do you need to see below-trend growth and decelerating labor income growth to be convinced that you've done enough?
So it's hard to pick the pieces apart and say, how much of this and how much of that. We'll be looking at everything. And, of course, we'll be looking to see whether the signal from June CPI is replicated or the opposite of replicated, or whether it's somewhere in the middle. We'll be looking at the growth data. We'll be looking at the labor market data very closely, of course, and making an overall judgment about that. It's the totality of the data, I think, but with a particular focus on making progress on inflation.
If I could follow up, last month you said there were benefits to moderating the pace of increases because it would give you more information to make decisions. Would another CPI report like the one we just had in June allow you to at least maintain that slower pace and defer until the fall any decision on whether you need that second rate hike?
So I'm just going to tell you again what we're going to do in September. We're going to look at 2 additional job reports, 2 additional CPI reports, lots of activity data. And that's what we're going to look at, and we're going to make that decision then. And that decision could mean another hike in September, or it could mean that we decide to maintain at that level. And again, the question we're going to be asking ourselves is the overall signal one that we need to do more, that we need to tighten further? And if we get that signal whenever we get it, then, and that's the collective judgment of the committee, then we will move ahead. If we don't, then we'll have the option of maintaining policy at that level. But it's really dependent so much on the data, and we just don't have it yet.
Pergunta ao jornalista sobre a futura reunião de setembro do Comitê Federal de Mercado Aberto, e o presidente do FED respondeu novamente que vão aguardar os dados e tomarão decisões sobre se manter a política monetária, assim como está, ou mudar a atuação do FED.
How much are Americans truly harmed by inflation at its current level, headline level of 3%? And with that in mind, when do you put some weight back on the employment side of the dual mandate?
So I guess I'd say it this way. First, it is a good thing that headline inflation has come down so much, because that's really what the public experiences. And I would say that having headline inflation move down that much almost creates it will strengthen the broad sense that the public has that inflation is coming down, which will in turn, we hope, help inflation continue to move down. So you were really, sorry, what your question was?
Well, I mean, you've talked for many press conferences now about the harm created by inflation, how hard it is for people. So how much of that are we still seeing with inflation now down at 3?
So I guess I would put it this way. I'd say it this way. It's really a question of how do you balance the two risks, the risk of doing too much or doing too little. And, I would say that, we're coming to a place where there really are risks on both sides. It's hard to say exactly whether they're in balance or not, but as our stances become more restrictive and inflation moderates, we do increasingly face that risk. But, we need to see that inflation is durably down that far. As you know, we think, and most economists think, that core inflation is actually a better signal of where headline inflation is going, because headline inflation is affected greatly by volatile energy and food prices. So we would want core inflation to be coming down, because that's what we think core is signaling where headline is going to go in the future. And core inflation is still pretty elevated. There's reason to think it can come down now, but it's still quite elevated. And so we think we need to stay on task, and we think we're going to need to certainly hold policy at a restricted levels for some time, and we need to be prepared to raise further if we think that's appropriate.
Well, and then if inflation were to, just a quick follow, if it stays at 3 or drops even a little bit more, I mean, how much of an increase in unemployment do you think is acceptable to get that last bit of inflation? People are talking about the potential difficulty of the so-called last mile of inflation. So, but how much unemployment do you think is justified to get down that last?
So it is a very positive thing that actually the unemployment rate is the same as it was when we lifted off in March of 22 at 3.6%. So that's a real blessing, and that we've been able to achieve some disinflation. And we don't seek to, it's not that we're aiming to raise unemployment, but I would just say the historical record, we have to be honest about the historical record, which does suggest that when central banks go in and slow the economy to bring down inflation, the result tends to be some softening in labor market conditions. And so that is still the likely outcome here. And we hope that that's as little as possible. We have to be honest that is the likely outcome. The worst outcome for everyone, of course, would be not to deal with inflation now, not get it done. Whatever the short-term social costs of getting inflation under control, the longer-term social costs of failing to do so are greater, and that the historical record is very, very clear on that. If you go through a period where inflation expectations are not anchored, inflation is volatile, it interferes with people's lives and with economic activity, and that's the thing we really need to avoid and will avoid.
A pergunta do jornalista é quanto é tolerável de inflação e também a relação com o desemprego. E a resposta do presidente do Federal Reserve foi que a inflação é positiva, que a inflação volte a estar caindo, esteja nas manchetes dos jornais essa queda da inflação, essa redução na inflação, porque a inflação muito alta, expectativas de inflação alta no médio e longo prazo, algo muito negativo socialmente falando. Então, o presidente do FED de novo salientou quanto o Banco Central está concentrado em manter baixas não apenas a inflação atual, mas também as expectativas de inflação futura.
Or is the economy disinflating, and you're able to go back to the old Fed policy of opportunistic disinflation?
So I'll just say, again, the broader picture of what we want to see is we want to see easing of supply constraints and normalization of pandemic-related distortions to demand and supply. We want to see economic growth running at moderate or modest levels to help ease inflationary pressures. We want to see continued restoration of supply and demand balance, particularly in the labor market, and all of that should lead to declining inflationary pressures. Now, what we see is those pieces of the puzzle coming together, and we're seeing evidence of those things now. But I would say that what our eyes are telling us is that policy has not been restrictive enough for long enough to have its full desired effects. So we intend, again, to keep policy restrictive until we're confident that inflation is coming down sustainably toward our 2% target, and we're prepared to further tighten if that is appropriate. And we think the process, still probably has a long way to go.
A pergunta do jornalista é sobre como estão reagindo à situação atual, falando dos aumentos de preços. O Powell respondeu que é um puzzle que junta aumento da inflação por causa da situação pós-pandêmica, a demanda também, serviços, e disse que, se for necessário, estão prontos para aumentar juros para voltar a um nível de inflação de pelo menos por volta de 2% ao ano.
If September is in fact a live meeting, how does that square with the need for a more gradual tightening pace that you spoke of last month in explaining the rationale for holding the funds rate steady at the June meeting?
So a more gradual pace doesn't go immediately to every other meeting. It could be 2 out of 3 meetings, right? It just means if you're slowing down. The point really was to slow down the decision cycle as we get closer and closer to, we think, our destination. And I wouldn't want to go automatically to every other meeting because I just don't think I think it's not an environment where we want to provide a lot of forward guidance. There's a lot of uncertainty out there. We just want to keep moving at what we think is the right pace. And I do think it makes all the sense in the world to slow down as we now make these finally judged decisions. And so that's what we did. And so I think it's possible, I mentioned before, it's possible that we would move at consecutive meetings. We're not taking that off the table, or we might not. It's really going to depend on what the data tell us. That's the best we can do.
So we shouldn't assume that every other meeting is the lowest tightening frequency, let's say. It could be, longer intervals in between as well.
I think we're going to, I think we're going to make a decision about the next meeting, and then we're going to make a decision about the one after that, and I think it'll sort itself out.
Normalmente pergunta sobre possível alta de juros ou manutenção das taxas, e o presidente reafirmou que a decisão será tomada reunião após reunião. A jornalista insistiu quanto poderia ser a margem entre uma reunião e a outra para eventualmente mudar a política monetária, e o presidente reafirmou que vão decidir reunião após reunião.
So there's a long-running debate about the lags between changes in financial conditions and the response to those changes from economic activity and inflation, right? So we know that in the modern era, financial conditions move in anticipation of our decisions, and that has clearly been the case in this cycle. So in a sense, the clock starts earlier than it used to, but that doesn't necessarily change the process from that point on, and it's not clear that it has. I'll tell you what we know and then what we don't know. We know that financial conditions affect economic activity and inflation with a lag that can be long and variable, or lags, plural, that can be long and variable. A lot of uncertainty around the length of the lags, and by the way, that's just one component of the broader uncertainty that we face. So I'll tell you how I think about this. The first thing to say is we're determined to bring inflation down to 2% over time, and we will use our tools to do that. No one should doubt that. I would look at it this way, though. The real federal funds rate is now in meaningfully positive territory. If you take the nominal federal funds rate, subtract a mainstream estimate of near-term inflation expectations, you get a real federal funds rate that is well above most estimates of the longer-term neutral rate. So I would say monetary policy is restrictive, more so after today's decision, meaning that it is putting downward pressure on economic activity and inflation. We'll keep monetary policy restrictive until we think it's not appropriate to do so. So that's how I think about it. I mean, if I sum it up, I would say we've come a long way. We are resolutely committed to returning inflation to our 2% goal over time. Inflation has repeatedly proved stronger than we and other forecasters have expected. And at some point that may change. We have to be ready to follow the data, and given how far we've come, we can afford to be a little patient as well as resolute as we let this unfold.
On the credit side, I'm wondering if you saw
Somente a
anything in the
pergunta sobre os juros dos juros aplicados nos Fed Funds, ou seja, na título de dívida pública americana, e o presidente da Federal Reserve disse que, de novo, eles estão com o compromisso de manter a inflação para 2% e os juros serão alinhados de forma apropriada.
It's broadly consistent with what you would expect. You've got lending conditions tight and getting a little tighter. You've got weak demand, and it gives a picture of pretty tight credit conditions in the economy. I think it's really hard to tease out how much of that is from this source or that source, but I think what matters is the overall picture is of tight and tightening lending conditions, and that's what this sleuth will say.
Rachel.
Hi, Chair Powell. Rachel Siegel from the Washington Post. Thanks for taking our questions. Could you break down the reasons why inflation has fallen and what share of that credit you would give to factors that don't stem directly from rate hikes or that might be within your control at all, like easing supply chains and a drop in energy prices over the past year?
Yeah. So, interesting question. So, let me start by saying that the inflation surge that we saw in the pandemic resulted from a collision of elevated demand and constrained supply, both of which followed from the unprecedented features of the pandemic and the response from fiscal and monetary policy. And we've always expected that the disinflationary process would stem from both from the normalization of those broad pandemic-related supply and demand conditions and from restrictive monetary policy, which would help return the balance between supply and demand by restraining demand. And we think that's broadly what we're seeing. So to go break it down a little further, of course, headline inflation has come down sharply from elevated levels as energy and food prices have come down, mostly due to reversal of the effects from the war in Ukraine. And that's a good thing, and the public experiences that, as I mentioned earlier. For core inflation, I'd say there has been a role for both factors, both that I mentioned. Clearly, for goods, normalization of supply conditions is playing an important role, as is the beginning of the reversal of spending back into services and away from goods. Take autos as an example. The combination of an increase in sales and inventories, while vehicle inflation has decelerated, points to a substantial role for supply. But there's also a role for demand, as the loans and things like that are more expensive. So they're both working there. Housing services inflation now starts to move down. Clearly, higher rates have slowed the housing market. I would say monetary policy is working about as we expect, and we think it'll play an important role going forward, in particular in non-housing services, where really we think that's where the labor market will come in as a very, very important factor. So we think both of those sources of disinflation are playing an important role.
I see. And just to follow up, do you think that of those two sources, that core will rely more heavily on seeing an impact from rate hikes, or is there a more even split there too?
I think monetary policy is going to be important going forward, because we're sort of reaping now the benefits of the reversal of some of the very specific pandemic things. We're seeing that with goods in particular, with supply chains and shortages moving, and we're seeing. So I think going forward, monetary policy will be important, particularly in the sector, in the non-housing services sector.
Presidente do Banco Central americano falando sobre as razões, após respondendo uma pergunta sobre causas exógenas da inflação provocadas pela pandemia. Ele explicou que essa inflação é provocada por dois lados, o aumento da demanda durante a pandemia e também problemas na oferta. E, de fato, resumindo, ele disse que a política monetária tem um importante papel para normalizar a situação e manter isso sob controle, situação que já está, segundo ele, se normalizando ao longo dos meses, graças à volta da oferta e uma redução da demanda.
So wage inflation, like how do you target wage inflation without pushing an economy into a recession?
I don't think we're targeting wage inflation. I think what we're looking for is a broad cooling in labor market conditions, and that's what we're seeing. So wages have actually been gradually moving down. They're still at levels that would be consistent over a long period of time with 2% inflation. Nonetheless, we're making progress there. And by so many indicators, labor market demand is cooling. You can look at surveys by workers and businesses who see that. You can look at the quits rate normalizing. You can look at job openings coming down. You can look at just job creation in the establishment survey has, it's still at a high level, but it was at really an extraordinarily high level for most of the last 2 years. So you see cooling, particularly in private sector in the last in the last report. So I think we see that, and it's happening at a gradual pace. So that's actually not a bad thing in a sense, because if what we see is a labor market, very strong demand for labor, which is really the engine of the economy. People are getting hired, many people going back to work, getting wages, spending money, and that's really what's driving the economy. But that it's gradually slowing, it's gradually cooling. That's a good prescription for getting where we want to get.
But still, we see a push to raise minimum wage. We're seeing a lot of unions go on strike or threaten strike, and the common thing is they come out with agreements like big pay increases, like UPS, and we have the auto workers coming up. Are you concerned then about a trend of series of big unions, these contract pushing wage inflation then?
Not for us to comment on contract negotiations, not our job, not our role. We monitor these things and we'll keep an eye on them, but really that's something that's handled at that level. And not,
a large amount of people.
Victoria.
Hi, Victoria Guido with Politico. I wanted to ask about the SEP, which suggests that you would cut rates as overall and core PCE get to around or under 3%. And so I'm wondering, is the level of inflation what's sort of important there as you think about getting to 2% and when you might start cutting rates, or is the speed at which inflation is falling also important?
I think you'd take both into account. I think you'd take everything into account when you start cutting rates. It would depend on the whole, on a wide range of things. And when people are writing down rate cuts next year, it just is a sense that inflation is coming down and we're comfortable that it's coming down and it's time to start cutting rates. I think, but I mean, there's a lot of uncertainty between what happens, in the next meeting cycle, let alone the next year, let alone the year after that. So it's hard to say exactly what happens there, what's motivating people.
So if it's sort of stubbornly in maybe the high twos, you wouldn't necessarily cut rates?
I'm not saying that at all. I'm not giving you any numerical guidance around that. I'm saying we'd be comfortable cutting rates when we're comfortable cutting rates, and that won't be this year, I don't think. It would be, many people wrote down rate cuts for next year. I think the median was several for next year, and that's just going to be a judgment that we have to make then, a full year from now, and it'll be about how confident we are that inflation is in fact coming down to our 2% goal.
Paulo, risposta interessante essa do Paulo perguntado sobre o guidance, ou seja, a trajetória dos juros futuros. Ele disse que os juros poderão cair, ele não acha esse ano possível, mas eventualmente no ano que vem, como muitos, segundo ele, estão já procrastinando, estão já prevendo para um corte eventual da taxa de juros nos Estados Unidos.
Personally have changed your view in terms of becoming more confident that you can achieve a soft landing?
So it has been my view consistently that we do have a shot, and my base case is that we will be able to achieve inflation moving back down to our target without the kind of really significant downturn that results in high levels of job losses that we've seen in some past instances, many past instances of tightening that look like ours. That's been my view. That's still my view. And I think that's sort of consistent with what I see today. So, but it's a long way from assured, and we have a lot left to go to see that happen. So the staff now has a noticeable slowdown in growth starting later this year in the forecast. But given the resilience of the economy recently, they are no longer forecasting a recession. I just want to note that that our staff produces its own forecast, which is independent of the forecast that we, as FOMC participants, produce. Having an independent staff forecast, as well as the individual participant forecast, is really a strength of our process. There's just a lot of, I think, constructive diversity of opinion that helps us make. Informs our deliberations, helps us make, I hope, better decisions.
And is the reason for optimism that inflation has come down and you still have a strong labor market? I mean, does that add to the optimism?
I wouldn't use the term optimism about this yet. I would say, though, that there's a pathway. And yes, that's a good way to think about it. We've seen so far the beginnings of disinflation without any real costs in the labor market, and that's a really good thing. I would just also say the historical records suggest that there's very likely to be some softening in labor market conditions, and consistent with having a soft landing. You would have some softening in labor market conditions, and that's still likely as we go forward with this process. But it's a good thing to date that we haven't really seen that. We've seen softening through not through unemployment, not through higher unemployment. We've seen softening through job openings coming down part of the way back to more normal levels. The quits rate, so people are not quitting as much. We've seen participation, people coming in, and so labor supply has improved, which has lowered the temperature in the labor market, which was quite overheated, going back a year or so. So we're seeing that kind of cooling, and that's very healthy, and we hope it continues.
Jeff.
Thank you, Mr. Chairman. Jeff Cox from CNBC.com. You and other Fed officials in the past have suggested that you don't need to keep hiking until inflation hits 2%, that as long as you see continued progress. So I'm wondering, how close do you need to get with the inflation numbers coming down? How many months of data do you need to see that will give you sufficient confidence? And how far does this fight need to go before you're willing to kind of declare victory on it?
So the idea that we would keep hiking until inflation gets to 2%, it would be a prescription of going way past the target. That's clearly not the appropriate way to think about it. So. In fact, if you look at our forecasts, the median participant, and again, these are forecasting out years, so take them with a grain of salt, but people are cutting rates next year because the federal funds rate is at a restrictive level now. So if we see inflation coming down credibly, sustainably, then we don't need to be at a restrictive level anymore. We can move back to a neutral level, and then below a neutral level at a certain point. I think we of course would be very careful about that. We'd really want to be sure that inflation is coming down in a sustainable level. And it's hard to make. I'm not going to try to make a numerical assessment of when and where that would be, but that's the way I would think about it. Is you'd stop raising long before you got to 2% inflation, and you'd start cutting before you got to 2% inflation too, because we don't see ourselves getting to 2% inflation until all the way back to 2 until 2025 or so. So.
Jennifer.
Thank you, Chair Powell. Jennifer Schonberger with Yahoo Finance. It's been over 4 months since a handful of regional banks, including Silicon Valley Bank, failed. When you look at credit conditions now, given Banc of California's acquisition of PacWest, does this acquisition suggest the full impact has not been felt, or are you comfortable saying that we've seen most of the ripple effects that may have occurred at this point, and how does this play into your outlook for policy?
So I don't want to comment on any particular merger proposal, but I will say things have settled down for sure out there. Deposit flows have stabilized, capital and liquidity remain strong. Aggregate bank lending was stable quarter over quarter and is up significantly year over year. Banking sector profits generally are coming in strong this quarter, and overall the banking system remains strong and resilient. Of course, we're still watching the situation carefully and monitoring conditions in the banking sector. In terms of the actual effect on, if you think of a particular set of banks that were affected because of their size and business model and things like that, that were more affected by the turmoil in March than others, it's very hard, as I mentioned, it's very hard to sort of tease out the effects on this very large economy of ours from them tightening. They may be tightening a little bit more, probably are, than other banks. The SLOOS has been telling us for more than a year that banking conditions are tightening. That process is ongoing, and that will restrain economic growth. So I think we have to take a step back from. I can't separate those anymore. I think basically we're just looking at the overall picture, which is one of tightening credit conditions, and that's going to restrain economic activity. It is restraining economic activity. So that's how I would look at it.
And how is that informing your outlook for setting policy?
So I think that is an expected result of tightening interest rate policy, is that bank credit conditions, bank lending conditions would tighten as well. And so the question is it more effective this time because of what happened in May? I just don't think we know that. I think we're looking at the current data in GDP, and we're seeing strong spending. We're seeing a strong economy, and it's made us confident that we can go ahead and raise interest rates now for the third time since the March events. It seems like the economy is weathering this well, but of course we're watching it carefully and expect to continue to do that.
Hi, Chair Powell. Thanks for taking our questions. Megan Casella with Barron's. I wondered on wages if you were at all concerned about any inflationary impact of wages now outpacing inflation, which is likely contributing to the boost in consumer sentiment and the continued strength of the consumer that we've been seeing.
Well, wages in excess of inflation means real wages are positive. Again, that's a great thing. Of course, we want that. We want people to have real wages, but we want wages to be going up at a level that's consistent with 2% inflation over time. As I mentioned, nominal wages have been coming down gradually, and that's what we want to see. We expect to see more of that. That's just more of what's consistent over a longer period of time. We don't really think that wages were an important cause of inflation in the first year or so of the outbreak, but I would say that wages are probably an important issue going forward. Labor market conditions broadly are going to be an important part of getting inflation back down, and that's why we think we need some further softening in labor market conditions.
This goes sort of to the balance of risks question, but you mentioned at the start how you're keeping an eye on consumer activity and whether there might be some sort of a rebound there. And I'm curious what the Fed's explanation would be to families if further interest rate hikes start to hit the labor market, start to drive that sentiment back down. What's the message there of why you continue to keep rates elevated or to raise them?
Well, we have a job assigned to us by Congress to get inflation under control, and we think the single most important thing we can do to benefit those very families, especially families at the lower end of the income spectrum, is to get inflation sustainably under control and restore price stability. We think that is the most important thing we can do now, and we're determined to do that. And I would just point out that the people who are the most hurt by inflation right away are people who are on a low fixed income, who, when you're talking about travel or transportation costs, heating costs, clothing, food, things like that, if you're just making it through each month on your paycheck and prices go up, you're in trouble right away. Even middle-class people have some resources and can absorb inflation. The people in the lower end of the income spectrum have a harder time doing that. So we need to get this done, and the record is clear that if we take too long or if we don't succeed, that the pain will only be greater. So that's how I would explain what we're doing.
Thank you, Chair Powell. Simon Rabinovich with The Economist. You had said last month that this meeting this week was going to be a live one. In the event, the market had assigned a roughly 99% probability to the rate.
Estamos acompanhando então a coletiva de imprensa do presidente do Banco Central norte-americano, Jerome Powell, após a decisão de elevar em 0,25 ponto percentual a taxa de juros lá dos Estados Unidos. Então, só para a gente fazer um resumo do que foi falado até agora, para começar aqui com a declaração do FONC, dizendo que os indicadores recentes sugerem ali que a atividade econômica vem crescendo nos Estados Unidos em ritmo moderado. Os ganhos de empregos ali foram robustos nos últimos meses e a taxa de desemprego permaneceu baixa. A inflação segue elevada e o sistema bancário dos Estados Unidos é sólido e resiliente. Condições de crédito mais apertadas para as famílias e empresas devem pesar na atividade econômica, nas contrações e na inflação. A extensão desses efeitos permanece incerta e o comitê permanece altamente atento aos riscos de inflação, dando a entender aí para uma abertura para um aumento aí, um possível aumento numa próxima reunião. Em relação ao discurso, então, do presidente do FED, nesse momento a gente está conferindo uma coletiva de imprensa onde alguns jornalistas estão fazendo perguntas a Jerome Powell, mas então na coletiva de imprensa ele disse que vai continuar monitorando as implicações das informações recebidas para as perspectivas econômicas. O FONC está preparado para ajustar a postura da política monetária conforme apropriado, caso surgissem riscos para atingir a meta da inflação. E ainda falando sobre essa decisão que foi unânime, inclusive o FONC elevou os juros nos Estados Unidos, então só para lembrar, em 25 pontos percentuais ali para 5,5%. E o comunicado, então, indica um ritmo moderado da atividade econômica e ganhos robustos de emprego, além de destacar que a inflação segue bem elevada. E voltando, então, ao discurso de Jerome Powell, ele disse que está comprometido a levar a inflação à meta de 2%, disse que continua a olhar dados para determinar a abordagem de política monetária. E enquanto o Jerome Powell fala aí, neste momento, a gente tem Dow Jones aí subindo 0,10%, SP 500 caindo 0,24%, Nasdaq 0,44%, operando em sinal negativo. Então, conforme Jerome Powell fala, e juros também ampliam altas ali, mas dólar acentua uma queda neste momento. Bom, ainda continuando sobre o discurso de Powell, ele disse também sobre o mercado de trabalho nos Estados Unidos, que continua muito apertado, taxa de desemprego segue baixa em 3,6%. Ele disse ainda que há sinal de que o mercado de trabalho caminha aí para um equilíbrio menor, inflação continua alta, moderou, mas segue ainda acima da meta. Segundo palavras de Powell, ele disse: continuaremos a olhar dados para determinar se novo aperto será apropriado. Já vimos impacto dos juros sobre a demanda e também do setor imobiliário. Vamos tomar decisões reunião a reunião. Somos dependentes dos dados e implicações. Reduzir a inflação deve exigir um período de crescimento abaixo do potencial. Não tomamos qualquer decisão sobre as próximas reuniões. Segundo Jerome Powell, disse também que espera que a inflação siga em um padrão mais baixo, consistente com o CPI de junho, né? Segundo ele, o CPI de junho veio melhor do que o esperado, mas é apenas um dado. Precisamos ver mais ainda para conseguir ter uma decisão mais robusta. A política monetária está em território restritivo, segundo Powell. Elevação de juros em setembro é, sim, possibilidade, assim como manutenção. Deixou aberto, então, para essas duas opções, assim como uma alta ou uma manutenção. Ainda, segundo palavras de Powell, força da economia em geral é coisa boa, mas pode levar a mais inflação. Isso levaria a uma ação nossa. E sobre a reunião de setembro, né, da próxima reunião em que pode aumentar ou reduzir ou até uma manutenção da taxa, ele disse que é muito dependente de dados que ainda não se tem em mãos. Então, eles vão esperar esses dados saírem para tomar uma decisão. Powell cita ainda mais dados de mercado de trabalho, 2 CPIs, dos PCIs, aliás, dos PCIs também, né, que são dados importantes da economia americana. Então, ele citou esses dados, CPIs, PCIs, e segundo, confirmando, né, esse tom do comunicado, Powell acaba de dizer que, então, só para fazer um resumo, que uma pausa no aperto dos juros em setembro é uma possibilidade, assim como um aumento. O presidente do FED não poderia dizer outra coisa, né, de acordo com os analistas, era o que se esperava mesmo, se mais uma vez condicionou as próximas reuniões de política monetária aos indicadores de atividade, emprego e inflação, mas o mercado já trabalha aí com uma possibilidade que o aumento ali para 5,5% pode ser o último até, como projetam ali os juros futuros do Fed Funds na ferramentas do CME, né, do CMI, em 80%. As bolsas de Nova York renovaram as máximas, os juros também na B3 acabaram derretendo e o dólar amplia a queda ante pares ali o real. Ainda sobre falas do presidente do Federal Reserve, ele falou também que o atual quadro é de risco para os dois lados, né, elevação ou não de juro. Núcleo de inflação ainda está muito elevado, tem que manter a política monetária restritiva por algum tempo. O pior cenário seria não reduzir a inflação, não fazer esse trabalho. Ele reiterou ainda que o Federal Reserve está preparado para mais aperto caso necessário. Então, algumas palavras de Jerome Powell, só para sintonizar você que está chegando na BM&C News neste momento, aí a coletiva de imprensa acontece lá nos Estados Unidos do presidente do Federal Reserve e acabou neste momento, então, a coletiva de imprensa dos jornalistas que questionavam ali Jerome Powell, presidente do Banco Central norte-americano, sobre essa decisão que acaba de sair nessa tarde. A gente deu em primeira mão aqui para vocês, ao vivo. Aí era uma expectativa muito grande para o mercado financeiro, não só nos Estados Unidos, mas aqui também. FED, então, retoma ciclo de aperto, eleva juros nos Estados Unidos em 0,25 e deixa a porta aberta para uma nova alta. A gente fez um resumo aqui de algumas falas do presidente do Federal Reserve, disse também que a política monetária vai ser importante para a desinflação de serviços. Juros mais altos têm desacelerado o mercado imobiliário, demanda no mercado de trabalho está caindo. A gente vê vários sinais disso, segundo palavras do próprio Jerome Powell, não acha que vai reduzir juros este ano. O corte em 2024 vai ainda ser debatido. Então, essas foram algumas falas importantes do presidente do Federal Reserve. Neste momento, a gente vai ver, então, como as bolsas estão se comportando após o discurso do presidente do Fed, após a ata ainda não saiu, porém, o comunicado aí, inclusive, como decisão unânime lá do Federal Reserve. Temos, então, Carlo Caucci aqui com a gente para a gente continuar o nosso closing, fechamento de mercado com essa novidade aí lá nos Estados Unidos.